Hey everyone, Meta Platform stock is up 177% year to date in 2023. So there's no way Meta Platform stock should be a buy for 2024, right? It's just already up so much, and so there's no way 2024 is going to be a good year for it. Or is it? That's the question I'm going to answer in this video. Now remember, I had Meta Platform stock rated as one of my top stocks to buy coming into 2023. And it's performed really, really well. So let's take a look at Meta Platforms. Let's look at its prospects and let's see if the stock is a buy, hold, or a sell for 2024. And I think you're going to be shocked with my recommendation. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So looking at Meta Platforms' most recent quarter, it had an excellent quarter in the third quarter that ended September 30th. Revenue increased by 23% year over year to 34.1 billion. Family daily active people, the people that use one of its apps daily, increased to 3.14 billion year over year. That was an increase of 7% year over year. Now, 7%, you might look at that number and say, oh, that's a pedestrian increase. But if you look at it in number terms, in actual numbers, that's roughly 200 million daily active users that Meta Platforms attracted over the year. So despite the fact that it's absolutely massive already, with nearly half of the planet using one of Meta's apps on a daily basis, it still increased by 200 million year over year. That's great. That's increasing the already strong competitive advantage it has from the network effects it gains by having all of those people on one of its apps. Another thing that benefits is the business is so lucrative because those 3 billion daily active people create the product that Meta sells, right? Those 3 billion people are making posts, posting images, making comments, liking and subscribing and interacting with each other. And all of that engagement is what Meta Platforms makes money from. It sells advertising to people browsing the platforms. And so it's free, user generated content, free, absolute, almost entirely free. That's what makes this business so lucrative. The company generated a 40% operating profit margin in the most recent quarter, and I'll show you going back several years that the company has generated strong profitability for several years. The foundation of the business is on strong footing. That business model where people just post things and others engage and all of that while Meta sits back and profits from the whole thing. It's an incredibly lucrative business model, and one of the main reasons I had Meta Platform stock rated as one of my top stocks to buy in 2023. I mentioned advertising. The company increased in the third quarter ad impressions delivered by 31%. So it increased ads year over year by 31%, and the average price per ad only decreased by 6% after it increased the supply by a whopping 31%. Now, the key thing about the increasing supply of ads is Meta controls that. It could, if it wanted to, really boost the ad impressions, making it so that you see more ads when you log on to the Meta platforms. But then that would mean a less engaging user experience, and people may not engage as often. They may not spend as much time on Meta's apps if they're seeing too many ads too frequently. But the good thing about this increase in the ad impressions is that it also came with a 7% year over year increase in monthly active users, over 200 million more people. So that's more engagement, more opportunities to sell ads, to show ads, because you've got 200 million more people on the platform than you did at the same time last year. So all of those people even seeing the same rate of advertisements, not increasing the rate, you're still showing more ads because there's more people, and more people means more engagement. Also, another reason why the ad impressions increased year over year is because Meta fought back strong competition. Remember TikTok and how quickly it was growing? That growth story is kind of not as strong as it was to begin the year or late in 2022. Sure, TikTok is still a prominent social media company that attracts a lot of user engagement, but Meta delivered its own short video platform, Reels, that's attracting people to spend more time on Meta's short form videos. And so that's brought back some of the customers that were going to TikTok when they wanted to watch short form videos. Now they can do that on Meta, and Meta has said that that's been incredibly popular. And so they've kind of beat back that competition. So that's really encouraging for Meta stock investors, that they've shown capability, that when there is a rival that comes up that threatens to take market share away from Meta, they're able to replicate, they're able to fight it back, and they're able to keep their market share and to keep growing their monthly active users and keep growing engagement. And that's something that is attractive to me as a long-term investor. I'm looking at the company's capability. How can it react to competition? And it's demonstrated that it reacts well to competition. Also, the company made significant cost cuts, headcount of 66,185 as of September 30th, was a decrease of 24% year over year. I'd been looking for this kind of cost cutting from Meta Platforms and Alphabet. I felt their ranks of employees was getting bloated, and I'm glad they did a trimming of their headcount to bring them down to more reasonable numbers. Still, 66,185 employees is plenty to manage these platforms and invest in their growth opportunities. Namely, the metaverse is where they are investing in growth opportunities. I mentioned I would show you the longer term revenue growth, and you could see going back to 2014 when revenue was less than 5 billion every quarter, that's exploded up to 34 billion in the most recent quarter. So the company has been able to take this user growth and turn it into increased revenue growth. More importantly, Meta has been able to turn that user growth into profitability. Operating profit margin has maintained above 20% for the last decade, and there was moments where it reached super high levels close to 50%, although I will say that's unsustainable. It was just brief moments where it hit this high of 50% operating profitability. In the most recent quarter at 29%, I would say something between the range of 30 to 45% is more reasonable to expect from Meta Platforms longer term, especially as it ramps down these investments in the metaverse and it starts to see the benefits from the investments in the metaverse later on in the decade. You can see the operating profitability start to increase as those investments start to pay off for Meta Platforms. So cash flow from operations in the trailing 12-month, look at this nice chart upward. Boy, does this look good. 66 billion in cash flow from operations in the trailing 12-month period. I mentioned how lucrative this business model is. Users generate this content for free, almost for free. Some users get paid, but almost for free. And this just turns into revenue and cash flow for Meta Platforms, 66 billion worth, and that's up from less than 8 billion in 2014. The hard part about building a business like Meta Platforms is building those network effects that Meta spent years building out, decades building out, and now that it's at this scale, it's so hard for anybody to compete against it, and it's so lucrative that you can see these billions in cash flow from operations. Finally, I wanted to look at Meta Platforms valuation. After all, coming off a year where the stock price is up so much, I want to see if the valuation is also up. But the valuation is higher. I mean, when I recommended the stock around January, look how cheap it was in terms of valuation. You can understand why I recommended it as one of my top stocks to buy for 2023. Still, even at a forward price to earnings of 19, I don't think the stock is too expensive, especially considering how it beat back the two main concerns I had with the stock. Number one was how was it going to deal with TikTok, and the launch and the progress of its own short form video platform has worked really well against TikTok. Also, the company found ways to work around those privacy policy changes made by Apple, which made it harder for Meta to sell targeted advertising. And finally, I like that they undertook a cost cutting campaign, shrinking their employee count, making the business more nimbler and more profitable. So, for all those reasons, going into 2024, I'm still recommending Meta Platforms stock as a buy. Even after it's up so much in 2023, I think it's got more room to go for 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.